Hey guys, welcome to today's lesson. Today we're going to do an introduction of tax tables, looking at taxable income and income tax. So we've already learned a little bit about what gross income is. So today we need to focus on what is a taxable income. We then need to focus on what is income tax. And then there's a few other things that we can look at, and some of those will be to do with our net income, which of course is our gross income subtracting our deductions. So let's say, for example, being a teacher, right? I might earn, let's say, a gross income of, let's say, $100,000. Now, let's say, throughout my job, I have bought like a laptop, I've had an iPad. Although I usually can't claim these, but let's say I can. I've got suits, clothing. I also have petrol I have to buy when I'm going from maybe one school to another school to do something or other. And let's say all these things across the period of the year, let's say they cost me $10,000 in total. Now, as a worker, I'm a little bit upset because I'm saying, okay, well, I've earned this $100,000, but $10,000 of this money has actually been taken out of my pay, but I needed that $10,000 in order to earn that $100,000. It's really quite strange. So in effect, what I've actually got, I'm getting $90,000 because I've had to take $10,000 away, which helped me to earn that original cost, that original amount of money. So it's a bit unfair. So what they say is this: well, you know what? To help the fact that you spent $10,000 on your work in order to earn that money, we're going to help you out by saying we're not going to charge you any tax on that. They're not going to refund the $10,000 because that's just not right. But they will say, well, look, because you need that $10,000 in order to earn your money, we're just not going to tax it. So they work out and say, well, your taxable income, the amount of money which we believe you should be taxed upon, is now going to be $90,000. And so what they will then do, they'll then throw it into a little tax table, and I'll show you one on the next page. They look at what bracket you might sit in, and they say, okay, you have to spend X amount of dollars, okay, on that $90,000. And so technically you're getting $10,000 of tax-free money that will then go towards your final net income. So that's, I guess, in a nutshell about what taxable income is. So the questions that you'll see will be something that looks like this. This is what we refer to as a tax table. Okay, this is a tax table. And they will vary depending on the year, because obviously each year things change. And so they all look the same though, which is a good thing. So in this question, it says, use this tax table to calculate his taxable income. Now, I've left off some important information which I'm going to add in now. So for this question, right, he earns $1,000.50, so $1,050 per week, which is based off an annual amount of $54,600 per annum. That's our annual salary, let's say. He has receipts for $375 of work-related expenses. So these are things that he can sort of claim to be tax-free. And it's going to ask us now to calculate his tax. So the first part of this question, we need to figure out what his taxable income is going to be. Now that might be a question that they give us, so let's find the taxable income. So we know that he earns $54,600, but we're claiming to say that we don't want to pay tax on $375 of that amount. So I'm simply subtracting that away to find my answer. Now that gives me a total of $54,225. So that's the amount that he believes he should be paying tax upon. So we need to find this amount before we can even go on to Part B. So that was Part A, sorry. So Part B will ask us to find the tax. Now, you might just be asked as a straight off question. You still need to find that amount. If there are no taxable claims, then we obviously don't have to deduct anything. You might say, well, why can't I deduct heaps more than $375? Well, whatever you deduct, you have to have receipts for. I think it's up to $300. So once you go over 300, then you have to have receipts for it. So, that's the kind of thing behind it. So now I can go to Part B, which says to pay some tax. Let's find his income tax. So let's write down income tax. Now, for his income tax, we have to figure out, first of all, which bracket is he in. And if I look at these brackets here, I'm thinking that it sits pretty much in this third tier, okay, which is in between 37 and 80,000. Now, that amount there, technically, we only care about this amount to figure out which bracket we're in. Once we know we're in this bracket, those numbers there mean nothing to us. I rub that out because people get confused and try and use it. We don't want to do that. It's the next set of amounts here which are important for us. It says we are being charged $3,572 plus 32.5 cents for every dollar over 37,000. So what I've done, I have to subtract that $37,000 away from my taxable income because that will tell me how far over I am. One thing that you may or may not notice is that I converted the cents into dollars because everything else is in dollars. Once I do that, it's simply a calculation. So 3572 plus 0.325 times the amount over 37,000. Okay. So once I do that, I'm going to chuck that all into my calculator and I come up with that amount of $9,170.13. And that's the actual income tax or the tax that I'm paying on my taxable income. Okay, so roughly in this case, it's about a fifth of what I'm earning. Now, for Part C, it says Richard also needs to pay a Medicare levy. Now, we didn't mention Medicare levy, but a Medicare levy basically pays for our free medical system. Free, not really. And it's 1.5% of his taxable income. So for this one, for Part C, well, I'm doing my 0.015 or 1.5% or 1.5 over 100, and we're simply timesing it by the taxable income of 54225. Okay, now once I do that, again, this is a matter of putting my calculator, and that means I have to pay a total of $813.38. Okay, that covers our little Medicare system. Part D says add the tax payable and the Medicare levy. Well, that's pretty easy. We're simply adding the tax and the Medicare, and that generates the answer of $9,909. So $83.51. That's pretty straightforward. Part E now says express the total tax in Part D as a percentage of your taxable income. Well, I've got my 9983.51 over, and it says as a percentage of his taxable income. So my taxable income is 54225, and to turn any fraction to a percentage, we simply times it by 100. Okay. Once I do that, we end up getting 18.4%. So again, those back-end questions are pretty straightforward. During the financial year, Richard's employer sent a total of $7,797 in tax to the ATO. That's the Australian Tax Office. And it says, has Richard paid too much tax or has he not paid enough? This is the big question that people struggle with. So we know that we've paid a total in tax, okay, of 9983.51. That's how much tax that he needs to pay. He's required to pay that amount. And then I look at the amount here and I say, okay, well, hold on. We only were that's how much money I've paid. I need to pay 9983. Therefore, I've actually missed out on a bit of cash that I actually owe. So I was supposed to pay 9983.51, but I only paid 7797. So what we can do is subtract those two, either way around, it doesn't really matter. And then we can figure out that we're actually in debt 2186.51. Now that will come up as a negative, and that just shows that we're in debt. But as long as you know that you haven't paid that amount, we know that it's unfortunate, we've got to pay it back. Of course, if you figured out that I'd paid too much, then it's happy days. I'll get a refund and I'll get money back into my account. Now this little amount here, although they didn't stipulate it, this is what we're often referred to as PAYG, which is called pay as you go. This is the tax that we paid over the course of the year in like little installments, like each week. But this income tax is how much that I'm supposed to pay. So usually we hope that we've paid more than we're supposed to, so we get money back. But in this case, it's unfortunate. He's got a tax debt. He needs to pay another $2,000 in order to get himself equal. Gents, it's a lot to take in. I hope it was a little bit useful. Any questions, please ask me, but make sure you have an understanding of the tax tables and how they work.